Boy, that time flies when you're having fun, doesn't it? Boy, oh boy, what a great day. Another great day in the books, though. It's about that time of day again here, folks. A beautiful Tuesday evening, May 21st, 2019. My name is Joseph, by the way, and this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find predictable, dependable, reliable, usually profitable trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to identify the best levels, the best setups, the best mindset, right, we want to be using for tomorrow. That's Wednesday's trading session. You know, guys, we all know there's money to be made out there in these financial markets. Every single morning, there's life-changing opportunities. And my job tonight on this newsletter and every day in my trade room is to help you go get a slice of it for yourself as well. And tonight, we're going to cover crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I'm going to jump in here on oil because oil has been proving to us over and over again today how difficult these range-bound markets can be and how easy it is to get sucked into some traps if you don't know where you are. Let's jump into that oil chart first here tonight because as you recall from last night's newsletter, right, we talked about how difficult it was going to be trading inside, right, of these trading ranges. And boy, did we see a great example of that today. And we're going to really parlay this into our trading session for tomorrow. Just in case you weren't here last night, oil is a range-bound market. I've got lower highs, I got higher lows. I have this trading range right in the middle all the way back from last Friday. We'll dig into that in more details as we go. And our exact words last night were, let's make sure we buy low, let's make sure we sell high, and what? Stay out of the middle. And I know this was difficult today, but with this very strong move down, the only real options were smack right in the middle of that range. So here's the reality. Right now, we are still trying to buy low, sell high here. I've got a strong move down. The bears got their second leg, which is what you would always expect after a strong move in one direction. Now, how can I find a way into this range? How can I find a way back into this range, right, without trading inside, right, that range? I'm looking for sellers to fail. But obviously, as we get that failure, we're going to run into the same problem being right back in the middle again. So I'm going to talk about a couple different scenarios. If we get the short-term bounce going up, how we'll use limit orders, right? Properly using limit orders to avoid the middle, make it easier to earn a profit tomorrow. Or if we get that next leg lower, right? What's the next step going to be to go back up, right, into that trading range? I'm looking to be a buyer right now on crude oil. Is it a short-term buy or is it a longer-term buy? That's the big question, and we're going to dive into that here in just a few moments on this video tonight. So make sure you stay tuned on the black gold. Over to the S&P here right now. Beautiful example, by the way, of that old trap we talked about, right, in last night's newsletter. Beautiful little, right, hidden channel trap. If you were watching this from last night's newsletter, boy, that trap was just prime time, right, early in the session. Bottom line, though, is we are bullish right now on the S&P. Right, bullish here on the S&P. Got this big old trading range we're watching right now. What do we know about the range? We want to sell high, we want to buy low, and we want to stay away from that middle, right? Well, most of the session today was spent where? Right in the middle of that range. That's not going to make our job very easy to be trading in the middle of that range. And you can definitely see nobody was really interested in trading it smack in the middle of that range as well. So I want to stay out of that middle. I don't want to be a buyer up here, right? You know we're bullish, but I don't want to buy up here. That's going against, right, the momentum, the mindset of this market. So I want to be a buyer, but I don't want to buy high here right now. So what I've done is I've taken this trading range, combining it with this hidden channel, and I'm sure you can probably already finish my sentence, right? I'm looking for some buying opportunities, short-term pullbacks, right, long-term pullbacks. I'll also talk about, right, if the market jumps and how we can try to break out, or if it jumps and we can sell this thing back down. So we'll talk all about buying and selling tonight on this S&P, and we'll also talk about what you want to avoid here to avoid those big traps on the ES for tomorrow as well. Over on the Nasdaq is a hell of a lot easier than the S&P right now. You wouldn't know it at first, but the Nasdaq's pretty simple here. We got a bull market here right now. Really, that bullishness combined with what I think is a wedge really gives us a great target of where we think these buyers are trying to go. Wink, wink, right? Big round number. Now, I'm going to use that wedge, but wedges give me a very, very strict set of rules. In fact, there are 3, maybe 4 different rules we'll go over tonight on this video about how to properly trade a wedge. So that's very important here because, again, we know where it wants to go, but we need to be careful about getting in. What I really hope we can do here is grab this hidden channel, right? That hidden channel, boy, that lines up for so many reasons. I love this area for a buy around 74, right, 34. We're going to combine this short-term trading range along with this wedge, right, along with, there's more, along with that hidden channel. And boy, oh boy, everything really piles on here around that 74.30 area. I'm going to talk about buying this. We'll talk about selling this, right? And we'll talk about, right, what if this market keeps going sideways because we got some big news tomorrow, right, on the calendar as well. So stay tuned. If you're an NQer out there like we are in our trade room, stay tuned on the NQ. And then how about that gold? We talked about this last night, right? Had a bear market into a trading range. We knew that, right? We knew that if we got this run lower, we'd have to wait for the sellers now to try a couple times, right, to be a buyer. Well, we talked about this morning in the trade room. We were pretty much waiting for a trap on this. We got the trap recently, and we'll talk more about this, right, as we go. But if you're not already in this move going higher right now, you should already be in this and have taken your first profit target if you're a client of mine, right? If you're not in it and you're trying to find a way into this market, there are really 2 different scenarios you want to be thinking about. One is a deeper pullback, and we'll talk about the specific patterns I'm going to use on the deeper pullback. And then also, too, as the market goes higher, you know, we don't want to pull a crude oil today, right, and go trading inside that range. So what if the market goes higher? What are my choices as the market goes higher? Is it too late to buy if it goes higher? And if so, what's the plan to be a buyer on this? And then let's not forget, right, we know where our targets are. And we're also going to be watching for that sell, right? Coming back down off that high. I have a lot to cover here tonight on this gold chart, so make sure you stay tuned if you're a fan of the yellow metal. And then over to the big mover of the day today, the euro. I'm half joking with you, obviously. Slow, sluggish, sleepy price action, but that didn't stop us from getting both of the scenarios, right, that we talked about from last night's newsletter. The nested failure back in, right, into the buyer pullback failure back down. I mean, what more can you ask for from that euro? Well, now we are back inside that range now, right, bear bias, and I don't want to give away, right, today's plan, but just look at what happened today, right? And we're looking for the same thing here, right, for tomorrow. We'll dig into that a lot more detail here tonight, obviously, on this video. We got big news coming up for the euro, right, later this week, so we know this is probably why things are so slow right now. My big question, though, is with that news right around the corner here, what would it take for a break higher? You know, what would it take? How would we trade it? Right? And what are some traps you want to fall in, right? You want to avoid here, right, on that euro? We're going to dig into all of these topics here tonight on this video. So euro is range bound. Gold is range bound, trying to run back up. Nasdaq, I'll tell you, Nasdaq is the chart of the day today. We're going to dig into that. S&P is trying to pick my pocket. I know it is. I know they're trying to pick my pocket tomorrow. So if you're an S&P trader, put your helmet on, and then we'll watch that section tonight. And then, of course, over on the oil, got a really difficult job here for that oil tomorrow. I'm going to break all this down here for you guys in just a few moments. Before we jump in though and put the plan together, I want to remind you, make sure you join our mailing list. That way you never miss another great video. You know, just before I publish this video every evening on our YouTube channel, I always make sure I send out the email blast to everybody on our mailing list. That way you can be the first people to get access to that video right when it goes live, because we always see so many great setups in that early couple hours right in the Asian session. Joining the mailing list is really easy. All I need is your name, your email address, and then hit that subscribe now button. And don't forget, your job's not over once you click that subscribe now button. You need to go in and check your email, check your inbox, and find that welcome email. Inside the welcome email is a very important verification link. You need to verify your inbox. That's why you need to give me a real email address, right? I'm sure I know folks don't like to give out email addresses, but if you want the good stuff from me, I need some sort of email address to email you that link to watch the video every evening. And remember, if you don't find that verification link, check your spam folder, your junk folder. Sometimes those emails will get stuck in your spam folder. So make sure you join our mailing list. That way you're always one of the first people to see that video every evening. And then don't forget, I'm always listening to your feedback. What do you love? What do you hate? What's your favorite market, right? Which market would you say, get rid of it, right? Replace it with this market. What's your favorite market? How do you use the newsletter? I'm always listening to your feedback. What do you love? What do you hate? What would you change, right? If you ran this newsletter every evening, how would you do it differently? I'm always listening because I want to make this the best place to learn and earn on the planet on this video newsletter. So drop me a comment in the comment section below. Let me know what you love, what you hate, what you would change. Right? How do you use this video? Do you watch the video before you finish up your day, or do you watch it before you trade the following morning, right? I would love to know how you're using this video to help your trading career, and you can post that feedback in the comment section below. And then while you're down there posting that feedback for me, if you watch our video every evening, do me a favor and give me a thumbs up on the video. That goes a long way at helping me get exposed to other traders, right, on the YouTube, kind of stratosphere out there. So give me a thumbs up, subscribe to our YouTube channel, drop me a comment in the comment section if you have any questions. And speaking of questions, I have a telephone too, right? And here's the best part. I actually use that telephone. When it rings, I answer it, and I'll answer whatever questions you have there. I know. I'm kind of dating myself right now. I actually talk on the phone. No chat bots, no call centers, right? No widgets and automated systems, and right? None of that garbage, right? We're a small family-run business here in Los Angeles. We love talking to our clients. I hope you love working with us as well. If you have any questions about getting started as a new client, joining our trade room on a free pass, accessing our free trading classes, or anything in between regarding charts, data, right, brokers, accounts, anything you have any questions with, definitely feel free to pick up that phone and call that toll-free phone number, or use that live support in the upper right-hand corner. But enough about that. We got some work to do here tonight, right? Time to roll those sleeves up. Let's get to work here. Tomorrow's Wednesday. It's May the 22nd. We talked about this last night, right? We got a holiday weekend coming up right around the corner, right? Friday is a half day. Next Monday is a holiday, which means as of Thursday afternoon, if anybody is physically at their desks, mentally they will be at the beach, right? That's kind of the attitude of Thursday afternoon, right, into Friday. I don't care if people are physically at their desks on Thursday and Friday, right, or Thursday afternoon, I should say, but there's definitely going to be a sense, right, a sense of people being distracted, I would imagine, ahead of that holiday weekend. The bottom line is, got a big holiday weekend coming up here. Friday markets have a half day. Obviously, weekend is closed, and then Monday, right, Monday is that holiday here in the United States. As we mentioned earlier on in the week, right, last night on the video, really tomorrow, Wednesday, is the last full trading day, right, of the week. And we've got some major news to worry about tomorrow. We got the weekly inventory report at 10:30. And, of course, we got the FOMC meeting minutes at 2 o'clock Eastern time. Most important thing here for tomorrow, last full day of trading of the week, right? We've got, again, pretty much a half day on Thursday. They're calling it a half day on Friday, but it's not going to be much of a half day on Friday. Probably about a quarter day or a fifth of a day or an eighth of a day, right, on Friday morning. So tomorrow is going to be the big, right, the last full trading session, right, of the week. And, of course, with that said, two major news events, right, tomorrow on the calendar. One is the petroleum status report, right? That weekly inventory report for all you crude oil traders. My strategy on Wednesdays, just so you know, my strategy is always get in early and get out early. Ultimately, you want to get those setups before 10 a.m. or after 10:40, right? My rule is always pretty simple. Get to it early. Find those setups, find those high quality setups before 10 o'clock. I'm talking about crude oil right now, obviously, because this is the weekly inventory report, the crude oil inventories, right, tomorrow. So this does not apply to gold, euro, S&P, or Nasdaq. This will just apply, right, again, just apply to the oil traders tomorrow. So 10 a.m., right, 10 a.m. is the cutoff. That's half an hour before the news comes out at 10:30. And then, of course, we got 10:30 is the news. Give about 5-10 minutes. Then by 10:40, right, you'll be all set to go here and get back in the saddle and start riding again. So if you're a crude oil trader like we are in our trade room, tomorrow morning, get to it early. And then again, after 10 o'clock, sitting on hands until after that news comes out about 10:40 Eastern time. And then we can trade the last hour right into the lunchtime session. Now, there may not be that much action after that news comes out because the next news event is quite a big one, right? The FOMC meeting minutes. Now, why are these minutes so important? It has a lot to do with what happened at the Federal Reserve announcement, the Fed announcement a few weeks ago, right, where our boy Jerome Powell, the Fed chairman right now, he made some commentary that left a lot of analysts thinking that they might be ready to raise rates here, right, if we don't start seeing some certain things. I'm not going to go into too much detail here, but the bottom line is the FOMC meeting minutes, those are the notes from the last Fed announcement. The last Fed announcement left a lot of analysts kind of scratching their head going, wait a second, are we raising rates? Are we staying where we are right now? Or are we possibly lowering rates? There was some question, right? There was some discrepancy in the terminology they use. Right? These days, everybody digs into these FOMC announcements. They dig through all the words, right? They look for words that have changed, right? And so tomorrow, these meeting minutes are going to probably be on everyone's radar tomorrow afternoon. What does that actually mean for us, though? Normally, these FOMC meeting minutes are not going to impact very much before lunch. But with tomorrow being, again, we've had a lot of chatter here this week about what will the minutes say, right, and using them. So I worry that we may see a little bit of an early lunchtime settling in here. That's my biggest concern here, right, for us tomorrow is we may have a slightly earlier lunch date, right? Usually lunch starts about 11:30, right, 11:40. We may see this a little bit earlier tomorrow, right? So 10:45, 11 o'clock because of kind of that pending, kind of waiting, right, to hear what those FOMC meeting minutes are going to be. My plan is always the same. I'm going to come out tomorrow morning, 8 o'clock Eastern time. We'll use our three-step strategy, like we always do, to identify the best market conditions, the best levels of support and resistance, and combine that support and resistance with the best entry setups. We're going to do it together until about 10:45, 11 o'clock, and we'll see how it goes from there. If it slows down really sharply into 11 o'clock, we know exactly what's happening. Lunchtime is coming in early. It's because of these FOMC meeting minutes coming out right at 2 o'clock Eastern time. If we don't, then no harm done. right? Usually these FOMC minutes are not going to be a big impact in the morning session. But again, because of what we heard from the Fed, right, about 10 days ago, right, we do know there is some speculation as far as what they actually meant at that last Fed announcement. And the meeting minutes, the notes from the last meeting are probably going to be what everyone's waiting for here tomorrow. So tomorrow morning, 8 o'clock Eastern time, same thing as always, right? Same thing as always. We'll see you guys tomorrow, 8 o'clock Eastern time in our trade room. And obviously, right, we'll be ready to go here with tonight's plan. Speaking of tonight's plan, let's take a look at the charts here right now. I got some oil, I got some S&P, we got some Nasdaq, gold, and euro. Jumping in here first over on the crude oil. First things first, it's a range-bound market, right? Kind of building on what we talked about in last night's newsletter. We have a bullish market into a trading range. That tells me I want to be a buyer off the low. I want to be a seller off the high. Okay, just basic idea, right? Buy low, sell high. Most importantly, stay away from the middle, right? Avoid the middle. Okay, now, knowing the general idea here, look at the short term. Get that zoomed in a little bit there, right? In the short term, though, what do we have? We have a very strong move down. That strong move down tells us what? Anytime we see a strong move in one direction, we're expecting to see a second leg. We get the second leg, and now what do we get? We get sellers trying to sell the pullback. Now, I would normally think, oh, perfect. Let's just buy right into those seller stop losses, right? We'll use a failure pattern. But here's the problem. Where does that put me? It puts me right back in the middle of this trading range. So really at this point, I know we're bearish. I know that we have sellers here who are trying to sell, right, going lower. I know they're trying to sell this thing going lower. I know where their stops are, right? I know those stops are sitting right up above that high. The problem is, though, look at the last time it went back to the middle, right? Last time it went back to the middle, what happened? It got kicked out. And that's probably going to happen again. So I'm looking at this as most likely going to be a potential seller failure. The problem, though, is I don't want to buy that middle. So what I'll look for tomorrow is to use a limit order, right? Let this market take off, and then grab my orders and place my orders right below the low of that range, right? And wait for it, and it may not come back, right? But this is kind of the game we play, right? As it goes running higher into that range, what I look for is that move just outside the range, place my little buy limit, right? And look to be in from there. Hopefully, I'll be able to draw this trend line off that low, right, and use that trend line now, right, for my buy from there. So that's the idea, right? The idea is I want to be a buyer, but we really haven't stretched our legs yet. We really haven't gotten out of that range to give me a good way to get into this trade right now. So knowing that we have the sellers trying to sell this thing, I know I can be a buyer here. Don't trade the buy side. Let's draw that trend line up off the low, right? Wait to get it back, and we'll buy it just outside that range. Okay, the hard part tomorrow is going to be is not chasing it as it goes higher. Because I'll tell you right now, it's going to look very convincing, right? It will. It'll look very convincing when it goes back up into that range. So basically, this would be what we call a failure pattern, right, with a delayed entry. Right? You're going to wait for that pullback. Okay? So it's a failure pattern with a delayed entry. Now, I made mention earlier, we really haven't stretched our legs yet. So what would that look like, right? What if it goes lower? Okay? So now we know if the market goes higher here, right? I know the plan if the market goes higher. The plan is, right, buy that pullback, stay outside the range. Okay? What if the market goes lower? If it goes lower now, we're still dealing with a bear momentum. Now, we talked about this last night. What's the best way to buy when the market is overall bearish? We look for a very specific setup, and that's called a nested failure pattern. When we have the market bearish like this, but again, knowing that this is a big range, I want to be a buyer going back up into that range. So how do we do that? We have to let the sellers try and fail a couple times. Let them try once, let them try twice, and we'll buy now going back up into that trading range. Okay, so once again here, if we see that next leg lower, I'm not trying to be a seller on this because, again, look where we are. We're at the low of that range. If the market runs lower here now with the bearish momentum, I'm looking for what we call a nested two-try failure, which is a 1, a 2. Let the bears try once, let them try twice. And again, hopefully this time around, right, because we saw a great example back here, right? 1, 2. Only problem is, look where it puts you. It puts you right inside that range. Okay? That's what we want to avoid. We want to avoid that trap. That's a trap waiting for tomorrow. Let's get it in here, right? Let's get below that range. Okay? So two basic patterns. If the market, right, goes higher, it's a failure pattern with a delayed entry, the failure being right above that high. But again, we don't want the failure there, right? We wait to buy the delayed entry. Or we get the nested failure, right? If it goes lower here, if it keeps going lower, it's the nested. Try them once, twice, and back down. Now, what if we don't get the move going lower? What if it just runs? Then what do we do? Well, at that point now, it's going to be a really bull market, right? This will be a very strong bull momentum at that point. And so my goal is just like we saw right back here. Strong move up. Buyers are in full control at that point with momentum. Let them try once, let them try twice, and we'll sell into their stops. Right? Once we see those buyers try a few times, then we can sell. Most important thing, obviously, is if we do make that run higher, get that moving average over, let the buyers try it once, let them try it twice. Once I have those buyers trying a couple times up here, then I can sell into those stops and drop it back into that range. The most important thing is going to be you don't want to take a trade like this, right? That's not the pattern we're looking for. That's going to put me right where I don't want to be. We got to get out of this area here. Get up, buyers fail. Get down, sellers fail. We're using failure patterns. We're using nested failures depending on momentum. Now, what's a breakout look like? What's a breakout look like here? Breakout, 1, 2, 3, breakout, right? It's not enough to just get a strong move lower. Right? We can't just get a strong move lower and think, okay, now I can safely sell this. The problem is it's not a trending environment. It's a range-bound market. So knowing that we have a range, I've got to get some proof of a breakout. And so whether we're bullish or bearish, if we're going to see a breakout here, it's got to be a 1, 2, 3 and really run. Right? It's got to show us it really means it. Because last time I checked, it's very difficult to break out of a range like this. Right? You can see we've had some real strong moves, right? Strong move up, couldn't hold it. Strong move down, couldn't hold it. Strong move up, boy, they looked good, but that's no breakout, right? Couldn't hold it. So it makes no sense to think that, right, we're gonna be able to break out of this range easily here. What I want to see is I want to see this 1, 2, 3 breakout. 1, strong move out. 2, pull back to the moving average, and 3 is that jump off the moving average. Remember though, right, if we don't get that jump off the moving average, buyers are going to be waiting here to buy right into those stops. Right? So be very, very careful trying to be too aggressive at selling that breakout. Once we do get that 1, 2, 3 breakout, then mark up that low, mark up this low, and then up off that high, find that hidden channel. All right, I'm drawing it off of this high, not that swing, and then we look for that sell off of the high, right, of that hidden channel, right? We call this a 1, 2, 3 reversal into a hidden channel pullback. So that's the breakout I'm looking for. We're trying to buy low. We're trying to sell high. I want to avoid the middle, and we'll focus on failures. Now, I'm going to keep going because I want to grab the E-minis next. But if you want to learn more about range-bound markets and how other ways to trade range-bound markets, along with all my favorite patterns, all my favorite setups, right, as along with hundreds of examples direct from our trade room, grab our free course, upper right-hand corner. In the upper right-hand corner, I'll also put a big red button here right below the video tonight. Grab that free trading course. You'll see a little pop up there in the upper right-hand corner, right? If you're serious about your trading career and you want to learn my favorite 4 entry patterns, how I use technical analysis, and all about our 3-step strategy, make sure you grab that free trading course. It's free, and again, it'll give you a big leg up, right, against the other traders in the market. In the meantime, let's keep going here. Over from oil, over to the S&P. Looking at the S&P right now. S&P's a tough one. Right? S&P's a tough one, and we saw today just how difficult the middle of this range can be. Now remember, right, we're dealing with this big wide, right, this big wide range here, right, if you recall, right, this big wide range right here coming from earlier on in the month, right? They failed to hold below, they failed to hold above, right? And now, of course, we're rattling around inside of the range. I'm not going to go over all of the mindset that we talked about in last night's video. If you missed last night's video, you definitely want to go back, right, and catch up on last night's video, because last night's video we talked about how this trading range, because it is so wide, right, because that range is so wide, why it's important for us, right, to avoid that middle. So if you watched, or sorry, if you missed, right, if you missed last night's video, what I'll do is I'll put a little pop up here, right, in the upper right hand corner, and that'll link over to last night's lesson, because that will kind of reiterate to you what, or kind of reinforce for you why this market and this wide range, right, is such a tricky environment. Now, with that said, what do we know right now? We know the market is bullish. Yep, we know that for a fact. We also know we had a big, it wasn't a big range, but it spent a lot of time inside of that range today, didn't it? Now, what do we know about range-bound markets, right? We know we want to buy low, we want to sell high, we want to go with the market's momentum, right? So right now, if I have that trading range and I'm above the top of that range, what do we do up here? We want to be a seller, right? Want to be a seller. Buy below the low, sell above the high. Now here's the problem. I'm not quite ready to be a seller yet in this market. I don't think we're there yet to be a seller yet, because we haven't retested the high of that range yet. So the idea of trying to be a seller prematurely, right, to retesting that high, I'm not too keen on that. I'm not going to be looking too good, right, trying to sell this market right now. What I would like to do, though, is I would like to find a way to buy underneath that trading range. Right? Remember, range-bound market, buy low, sell high. I don't want to sell right now because it looks like, right, we've got a big target waiting for us up at the high of that trading range, as we talked about in last night's video. Most important thing right now is we know we're bullish into a trading range. I definitely don't want to be buying up here. We're too close to the high of the range. We're above, right, the small range. Not a great spot to be a buyer here. What I'd love to do, though, is use that trading range and buy underneath it. Which brings me now to my next point, which is if I connect these two highs, bring it down to that low, right? This really looks great, right? This gives me a great spot down here to be a buyer below the low of that short-term range, using a couple levels of support, get a prior swing high. I call these reversal lines, by the way. Right? I call these reversal lines, by the way. And that, of course, that reversal line will act as support. The low of that range, the low of that hidden channel. The only concern I have on this is it's going to put us right around, right, the outer band of that middle third. And again, I'm not going to go into a lot of detail of why I'm using that middle third. I already remind you guys earlier, right, that video is linked up from last night's newsletter, and you can learn more about it. We saw today how nasty this market can be right in the middle third of these wide ranges. So really the ideal scenario would really be to get just outside, right, of that kind of middle third of this larger trading range. So I know there's a lot going on right now, right? Most important components are, we know we're bullish. I want to buy at support. I can connect these highs, find levels of support below. Great. The other thing is a trading range, right? I want to buy low. I want to sell high. I don't want to sell high, right? Because the market not only is bullish, but because of this big range, right? We know the market now is trying to get up to the opposite side of that range up there at 28.75 or so. And so trying to be a seller right now doesn't exactly jive right with that idea. So I know I want to be a seller above a range, just not in this situation, right? I'm looking to be a buyer below that range. And again, when I line up being below the range, being at the low of that channel, and then again, the middle of this range, it really puts me in a spot down here right around that 28.50 area. So what I'm looking for is I want to see a pullback, right? And this pullback will hopefully be nice and deep here for us. Get those sellers to think this market is a bear market. That's what I'm hoping for, right? I'm hoping we get a nice deep pullback. Let me get rid of this stuff here so we're not too confused there, right? Hopefully what we'll do is we'll get a nice deep pullback, right? That'll bring the moving average over. The sellers, of course, will try to sell off that, right? They'll try to sell off the moving average, right? Bears, of course, now will try to sell. Once they take that, right? Once they take the bait and try to sell it, now we know where stops are, and now I have the ability now to be a buyer into those stop losses using a failure setup, right? So imagine now we get a nice run lower, moving average comes over, the bears, they try to sell the pullback, right? Kind of like what happened back over here, right? Bears try to sell the pullback, and what happens, right? They fail, and the market runs back up. Same basic idea, right? Buyers are going to be waiting for those sellers to sell off that moving average and look to buy right into their stop. Now, normally, I would say look for the pullback here as well, but the pullback might not be a very good spot for it, right? Normally, I would say go after the failure setup and then into the pullback setup, right? I would normally say failure pattern into pullback pattern, but I worry that that pullback pattern is going to be a little bit too close for comfort, right? Once you kind of get that signal candle on there, that's the problem with that pullback. Now, another pattern I'm watching for is a two-legged pullback. And this would honestly be probably ideal. Draw that trend line down, and now we can use that trend line, right? Imagine now the bears to sell off that moving average now, and now you know stops, pull back, and go, right? Here are three patterns. One is the two-legged pullback, right? So imagine for a moment, strong move down, pull back, second leg over, right? So strong move down, pull back, second leg down. Draw the trend line off the high. We call that what? A two-legged pullback. Once we get that two-legged pullback, now I look for price to get above it and use it as a support level. Okay, very simple. We call these two LPs or two-legged pullbacks, right? 2LP pattern. Okay, and it makes sense because, right, it's one, it's two. Now, what's nice about these patterns is that you can combine them. For example, let's say, for example, we have a failure in combination with it, right? That will work too. In fact, you could really line up three of these setups as it comes off of that low, right? It's a two-legged pullback off the trend line. It's a failure pattern as the sellers try to sell off the moving average. And of course, it's a, what is it? It's a pullback pattern, right, as we go back up. Again, kind of a similar situation back here, right, without the two-legged pullback. We go strong move down. The bears try to sell off the moving average. When they fail, right, price jumps up. You'll notice it pulls back before it goes. Same idea over here, right? Same idea over there. All right, guys? So as we get that pullback, I'm watching for a two-legged pullback. I'm watching for a seller failure. I'm watching for, a breakout pullback as long as we're not trading in the middle, right, of that smaller range that we saw today. And again, if you want to see more examples of all of these patterns, I'm just drawing them out right now, but I've got hundreds of real examples of these patterns I would love to share with you, right, inside of our members section on that free course. So grab that free course in the upper right-hand corner, right? Grab the access to the free course material and you'll see for yourself, right? Hundreds of examples of how they really look on a real chart. Now, with that said, what if we go higher here, right? What if we don't get the pullback, right? Or what if we just sit right in the middle? Then what do? We wait. We wait for what? We wait for a breakout lower. We wait for sellers to try to sell the pullback. Again, same basic idea, right? And we buy into those stops. Again, keep your eyes on this area down there, right? That 28.51, 28.46 area. That's going to be a great spot to look for a buy. Now, what if we don't get the pullback, though? What if it jumps higher here? Well, ultimately, there are really three scenarios you're thinking about. We know where they want to go, right? They're trying to get to that 28.74 3/4. Okay, that is the goal for these buyers. If they can get through that high, then they're trying to get up into the next battle zone overhead, right? 28.86 1/4. So here are some things to consider. One would be we run up. Sell would be what? How would we sell in a bull market? Very carefully. No, we use the nested failure pattern, right? Because momentum is way too strong. So you want to see it go once. You want to see it twice. Because remember, right, in a bull market, how many times do you think the buyers are going to try before they give up? Once, maybe? No, probably twice. At least twice, right? In my experience, you're going to probably see when you're going against the trend, you want to give them one try, give them two tries, right? And then we can dump it back in. Okay, as opposed to, because we have a bull market right now, if we get a pullback, I don't need to wait for those bears to try twice. I let them try once off the moving average, and because momentum is already in my favor, I can buy into their failure, right? If we go higher here, we are very much going against momentum. So why would I even try to sell it? Well, because, again, you're top of the range, right? Buy low, sell high, right? And if you do, right, if we get the setup, if we get the 1, the 2, we can sell this thing. Right? Remember, though, you want to make sure you sell as high as you can, right? I wouldn't want to go up like this in 1, 2, right, and sell back here, right? That's not where I'm trying to trade, right? I want to go up. I want 1. I want 2. I want to be, again, buy low, sell high, stay away from the middle, right, of that range if at all possible. And then what would a breakout look like, right? How could we buy this thing as it goes higher? Real quick here. There are two possible breakouts I always watch for. One is a strong move followed by 2 attempts for the sellers, 1 and 2, and buying into stops. I call these 2-try breakouts. Again, it all starts with a 1, a very strong move. That's the key. This type of move needs to be really, really strong, because what's going to happen is you'll see, first of all, you'll see profit taking. That'll be the first pullback. Then you'll see sellers waiting right above that high, and they'll try it again. That's the second attempt now. Remember, right, if you want to be a buyer through the highs of this range, you're going to have to withstand the profit taking and the sellers coming in. So let them try once. Again, profit taking for the first one, and then sellers for the second one. Once you get the profit takers, once you get the sellers in, now wait for that nice strong signal, and we're buying right into those stop losses. Remember, at this point now, right, the people who took their profit, they're going to chase and get back in, and the sellers who are in now short, they're going to get stopped out. And how do you get stopped out of a short position? You become a buyer, right? So it fuels that move higher. That's called what? The 2-try breakout, right? Strong move up, bears try once, bears try twice, bingo. What else? How about a 1, 2, 3 breakout? 1, 2, 3 breakout. These are a lot more extreme, but if we get it, right, again, strong move up, pull back, strong move through, just like the 1, 2, 3 reversal we talked about, right, on the oil. Strong move up, pull back, strong move through. What do we do here now? Right, 1, 2, 3 breakout, mark up that high, and then again, off that low, right, that's your hidden channel now, and we're buying. The sweet spot here is that spot right between the first leg high, right, and the low of that hidden channel. And again, the hidden channel is drawn off those 2 new highs. Okay, look for that pullback, and we're buying off that pullback. All right, guys? So now we know what we want to do to sell this market. We know how to trade the breakout. More importantly, though, we know how to avoid some traps here on this S&P. And again, you know where, with that free course, right, where to get a lot more details about the overall strategy for this. Let's keep going. How about some Nasdaq? Nasdaq is so much easier than the S&P because we're not dealing with, right, all those ranges inside of ranges and, right, well, you know the drill. So what do we know right now in the Nasdaq? Well, we know we're bullish. What does a bull market tell me? It tells me buy low. Buy where? Buy at support. Okay, where can I find some support? Well, why don't we take these highs, bring it down to that low, and that's a great level of support, right? That's a beautiful, what we call a hidden level of support. Perfect. Okay, what else could I use for support? Well, why don't we take this trading range, right? Take that trading range. We go up, back, right? That is obviously a range-bound market right there. What do we know about a range? Well, I know for a fact that I can take the size of that range, copy and paste it down, and I can create a key area of support. Just like I can do the same thing to the upside, right? Copy and paste it up, and I can create a key level of resistance overhead. So I know just based on that tiny range, I know I have a support level down here, and I know I have a resistance level up here. Okay, now pay attention obviously to that support level down here because look where it lines up. It lines up right with the low of that hidden channel. Okay, where else can I find some support? Wait a second, how about this one? Right, we go up, double top, and pull back. You'll notice that line right there has been quite the active line, right? Pull back there, pull back there. Now, I will definitely say that the more number of times they touch that line, right, the less effective it usually becomes. But I'll tell you right now, it doesn't hurt to be there, right? It doesn't hurt to have it. That's for sure. There's nothing wrong with it being there. It's not hurting me to have it there. So it may not be the most right it could be, because of course those previous two tests beforehand. But boy, you put that kind of mediocre level there along with the hidden channel low, right, and that battle zone, and boy, oh boy, we get a great spot down here. Now, one very, very important thing though, which I haven't mentioned yet, is this wedge. Right? Now, wedges are really important because they tell me so many important things. First, they tell me direction. We already know that. We're bullish. Second, they tell me location. They're trying to go up to 7,500, right? What's 7,500? Big round number. So that's the target. Okay, we know direction, we know target. That's the easy stuff. Yesterday, we talked about mindset, right? The market's mindset. Here's the big thing you want to think about when it comes to a wedge. When wedges are wide, you can trade inside of them. But as we get narrower, as we start to get into the nitty-gritty, right? As we start getting into that narrow price action, here's what happens. Nobody wants to trade in the middle now, right? Nobody wants to trade in here. The mindset of the market says what? We've got to get outside this area right now. We've got to get outside, free up enough space. Okay? Now, where do we usually look for those? Where do you think that pullback will go to? Again, the mindset of the market says expect to see a deep pullback, right? A deep move on this because, again, nobody wants to trade inside. Now, where could we guess? Where do you think those sellers are going to go to or the buyers are waiting? Find the swings. Find the swings. Right there. Right between those two swings are usually where you're going to get the bounce. Right? It makes sense, right? The buyers don't want to trade inside the range because it's getting a little bit narrow in here, right? Get a little too narrow in here. So as it keeps going higher here, don't just walk with them, right? Wait for the pullback. And again, where will it probably be? Find that low right in there, right? Right in there. Use the prior swings, right? Use those prior swings. Perfect. So now that we know, right? Now that we know kind of the three basic ideas, right? We get direction. We know where target is, and we know as we start getting tight to expect that breakdown. Now let's put the plan together. Now a lot of this is going to be a lot like we talked about in the S&P, right? I want to see a pullback, right? I want to see us try to go lower here. Get that moving average coming over, right? Give me some sellers trying to sell off that pullback, right? I know you're going to see some bears trying to take that trade short. It's not a bear market though. The odds are not in their favor, and I want to be a buyer right into those stops. Now, don't forget, this almost always comes right back for a pullback, right? So watch out for that pullback as well. Again, it's a failure pattern right in that sweet spot, right where the hidden channel, the range levels, right? The reversal line at 34 and that deep pullback for the wedge, all where it comes together. It allows me to buy low, buy at support with a small amount of risk, right? And a large amount of profit. Great setup. Now, again, don't forget, these oftentimes pull back too. So if for some reason you don't get in on the failure, right, just wait patiently for the pullback. Okay, a failure pattern into a pullback. Or maybe, right, maybe this trend line keeps holding here, right? Maybe we end up seeing a two-legged pullback here, up and over and in, right? Maybe this trend line comes over. Maybe we end up 1, 2 down, up, over, and go off that trend line, right? And again, you can combine that two-legged pullback pattern. You can combine that two-legged pullback, combine it along with that same failure, right, that I mentioned earlier, right? Failure, two-legged pullback. And again, I'm just illustrating where I'm looking for these and the general principles of the pattern. You can see literally hundreds of examples of those patterns with that free trading course. The hardest part here in the Nasdaq is going to be if we go sideways, right? If we keep going sideways here, what's the plan if we keep going sideways? Stay patient. What do we look for? Let them try to make a run. Let them try to sell into that pullback, and we're buying right into that failure. Anytime I see a range with a bullish bias to it like this, I already know. I want to see those bears try to run it out. I want them to try to sell that pullback. We call this 1, 2 tries. And then once I see those bears have taken the bait, now I know where I want to be buying. I'm buying into their stop losses, because as a seller, if I get stopped out, what happens? I become a buyer, right? There's only one way out of a short position, and that is long, right? That is buying your way out of it. Now, what if we go higher here, right? What if we go higher here? What's the plan if this thing goes higher? Well, if it goes higher, it really has a lot to do with how it goes higher. Does it jump through the highs? Because if it does, it's probably going to ignore this channel or this wedge, and it's probably going to be hunting for that next measured move, which in this case will be up at that 75.37 and change. But in all reality, right, if it breaks right through this thing running, it's going to probably, it may bounce a little bit at that measured move, but you know what? It'll probably be hunting for that high, right, from yesterday in the pre-market, basically Sunday evening's high. And surprise, surprise, this is what keeps happening every single week right now. We keep seeing the big drop on Sunday into Monday. Tuesday and Wednesday we rebound. Thursday, Friday, we're right back to retest the high again. This continues to be kind of the mantra, right, of these equity markets. So how do we trade that though, right? How do we trade it? So we know kind of where we're thinking this market wants to go, right? If we break out of it, what's the plan? You've got two options, right? Strong breakout, 1, 2, buy into stops. Again, got to be a real strong breakout. Real strong break, and then watch how I draw this, guys, because I get a lot of questions about this. If I see a strong breakout, again, it's profit taking first. Then remember, sellers will be waiting above that high to try it again. Notice how these are higher. Then you know you've got to try for the bears and you're buying into their stops. Okay, very different if it does this. Up, pulls back, and lower high. Lower high doesn't help me very much, right? It doesn't. Well, it does and it doesn't, right? It tells me now I've got to get above it and use it, right, as a level of support now. Okay, very different than up, 1, higher high, 2. That's a 2-try breakout, right? That's a 2-try breakout, and we're buying with the appropriate signal candle, right, through those stops as they go. Okay, that will be relatively aggressive. So make sure you wait for that strong break up. Then I would much rather get a 1, 2, 3, because then we can mark off that high, mark off that low, mark up that one, right? There's your sweet spot. That will be a lot more conservative trade, obviously, right? It'll take a little bit longer because you have to wait for the 1, 2, 3, right? 1, 2, 3. Once you have that 1, 2, 3, though, mark up those highs, bring it down to that low, and that will give you the idea of where that low needs to be. Okay, and again, it's the combination of that high with that low. All right, again, going over the basics right now. We'll do all this together tomorrow in our trade room again, and you can learn more about the details inside that free trading class. Now, could I sell this market? Difficult, right? Very difficult. As the market goes higher, could I sell this? The problem is going to be we got that rising support trend line. So normally I would say 1, 2, and sell, but it's not a range-bound market. It's not a range. Well, I mean it is, but it's a bull market, right, into that range with that wedge. It's not like on the S&P where there's a big wide weekly range right now for us to worry about. So trying to be a seller here, if you want to be a seller, I would say definitely be very careful, maybe a half-size position, and you want to see a trap. 1, 2, and trap. That would be the only setup in this environment, at least for right now, I would feel comfortable being a seller here right now, and that would be the crown reversal pattern, right? It's a strong move up, but again, you're not seeing higher highs here right now. You see a lower high, a second attempt that makes a slightly higher high. The goal here is you're selling it, right, without retesting the major high. This is why I call it a crown reversal. Right? It kind of looks like a crown right on top of your head, right? So we know that as the market goes up, we know we're bullish. Most important thing is we know we have that trend line. And anytime I'm worried about selling into a level of support, what's the best pattern? Yeah, the best pattern is going to be some sort of trap, right? And the way that I like to use traps for reversals with a simple pattern called the crown reversal pattern, which we'll dive into a lot more detail in our trade room and obviously inside of our membership classes. All right, guys? So trap high, you'll learn all about traps inside that free trading course. We'll save the crown reversals, though, for our membership courses, obviously, right? Because, of course, we can't give away everything here, right? So we know we have that trap, right? We get the trap off that high. That would pretty much be the only sell I would try for as we go higher, unless, of course, we go 1, 2, 3 breakout, right? 1, 2, 3 breakout. Mark that low, up off that high now. You got it. And then we know where our sweet spot is. If we get that 1, 2, 3 breakdown, right? 1, 2, 3 breakdown, okay, that reversal, where's our target? We know where the entry is. Where's the target? Yeah, target's back down to retest those lows, right? So back down to retest, not today's lows, right? But yesterday's lows down around that 73.60 area. So relatively easy. There's a lot going on in this chart, but they all pretty much tell us the same thing. Buy low, right? The only challenge is going to be if we break out, right? Wait for the proof because it might go right up and right back down, right? So don't just buy the breakout. You know, hopefully by now, hopefully if you've watched enough of these newsletters, you know better than buying breakouts, right? Chasing after moves. This is not going to get you where you're trying to go. Now, over on the gold. Boy, what a beautiful setup on gold. We talked about this setup all morning today, right, in our trade room. And of course, right, we know we had from last night's newsletter, we had this strong move down into a trading range. And we talked about this, right? The goal last night was to go up and try to sell, right? Anytime I have a range-bound market, right, got my range, I'm bearish. So, of course, there are two basic patterns when it comes to a range-bound market with a bear bias. One is going to be we wait for the market to go up. We let the buyers try to buy the pullback, and we sell into their stop losses, right? I can be relatively aggressive on this setup because the market is bearish. However, if the price goes lower, how do I buy it back up into the range? I've got to be careful. Well, maybe not careful, but be more patient, right? I know that these sellers are probably going to try once, And they're probably going to try again, right? There'll be more sellers waiting right above that high to try to run me out. That's why you got to be very careful. You don't want to buy in a bear market with the same type of pattern you would sell in a bear market. And we talked about this last night, right, in the topic of market mindset. But the reality, though, is that you've got to think the sellers are probably going to try twice. This will oftentimes give you a rising support trend line, and I look for that nice, strong signal now, buying off support, waiting for the bears to try once, try twice, and oftentimes once it triggers stops, this thing just flies, right? Just flies right back up to the opposite side of that range. Now, you can see in this example, that's pretty much what we've got right now. It was a little more dramatic, right? We saw that big strong move down. You'll notice strong move down, 1, 2, and they ran it again, right? That's a great example right there of exactly why I don't take that failure pattern going against the trend. It's not a reliable way to do it, right? Use the failure pattern going with the trend. That's a great setup. But when you're going against the trend, though, let them try once, let them try twice, and if they run it lower here, the count starts over again. Well, then we saw this little shimmy going higher here, right? And we really didn't get a 1, a 2 until towards the end of today's trading session. That's why I mentioned earlier, we've got this thing triggering long right now. The problem, though, is if you're not in it, right? If you're not in it off of that support down here, if you're not in it off the lows, you don't want to be buying it now as it goes higher. So what are some options for me right now? I want to be a buyer, right? But we're too bearish just to buy, and I don't want to buy inside the range, right? We've already talked about this tonight. When I have a range, I want to buy low, I want to sell high, but I want to stay away from this middle, right? That's the ugly stuff. So how do we buy this market? I got to buy low, right? I've got to buy low, stay away from that middle. So what I'm going to try to do is I'm going to try to use these highs. Let's dig in a little bit closer here real quick so you guys can see it. I think that's close enough there. Perfect. Okay. So now we go up 1, 2 and pull back. I'm going to use those highs and create this little trend line. Then bring that down to that low and create that hidden channel low. That will solve my problem, right? That will solve my problem. So what I'm looking for right now is I want a trap, right? I want a trap down below that low. That will be a lovely setup if we can get it. Right? So trap low. And again, all you're really trying to do is you're just trying to stay the heck out of that range. Try to find some level of support right now, because if you didn't grab, this looks very small on this time frame, but on an actual trading time frame, this was a beautiful pattern, right? We go up, the bears try once, the bears try twice. Beautiful trap, right? Traps are great when what? When you don't want to be trading the middle. That's why I say this is a great setup right there. The problem, though, now is we're too high to buy here. So now if you want to be a buyer right now, one option is wait for that trap, use the combination of that trap low along with the low of that hidden channel. I love that setup. Hopefully we get it. Okay, that would also, you could also look at that and say, well, could you say this is 1, this is 2? Absolutely. You know, that is one of the nice things about the 2-try rule is it can be applied to fractals, right? So small time frames, slower time frames, bigger time frames, smaller time frames. It all works. Okay, so 1 try, 2 try, easily there, right, for that buy off that low. But what if we keep running higher here? That's where things are going to get a little bit tricky here. Let's say, for example, that this thing runs up. Then what do? Then what I'll do is I'm going to connect these highs, bring it up off this low, and look for ultimately the same basic pattern now, just a little bit higher, right? Does that make sense? So if we end up going higher here now, okay, don't chase after it. Wait for those traps, use that support level, and then up we go from there. Okay, now, what if we go up and we sit right in the middle? Well, what do we do with the market's bullish into a range? We use the 2-try failure pattern. Let the bears try once. Let them try twice, right? And we're buying up from there. Okay, that's if we sit inside this range for a while. Okay, what if we go higher here? We go higher. First of all, where's the target? The target for the buyers always is going to be the opposite side of that range, right? So easy first target, opposite side. Bigger second target now up at the pendulum swing. The amount of the move below the range is the amount of the move above the range. Buyers are trying to get to that 1283 and change. I'm not going to try to buy it up there. Obviously, we're buying low. But if we do make a run up, how could I sell it? Remember, we're very bullish right now. What's the best pattern to sell in a bull market? And why would I want to sell it? Because it's a range, right? It's a range. Buy low, sell high. This is not a trending market right now. It's a range-bound market. What's the best pattern, though, when the market has short-term bullish momentum, but I want to be a seller? Let them try once. You got it. Let them try twice and back down. I'm not worried about having enough space for a profit target, so I don't need a trap, but I'll tell you, a trap wouldn't be bad at all, right? A trap high up there, a crown reversal wouldn't be a bad idea whatsoever, okay? And then obviously, right, watch out for the breakout. Right? If it goes 1, 2, 3 and runs, obviously this thing's broken out. Mark the high, mark the high, mark the low, and I'll buy that pullback. If we do get a 1, 2, 3 breakout, that momentum will be so strong at that point that it'll be very difficult to slow that pullback down. Okay? That is the power momentum, right? Just as we saw back here. Right? You see that big move down like that. It's very difficult. Bears will try to sell that. Okay, so if we go up 1, 2, 3 and run, yeah, it'll be difficult to slow that market down. I will be looking to buy that next pullback. Absolutely. All right, guys, don't forget, we'll be doing this together tomorrow in the trade room. I know I'm covering a lot right now. I do not expect you to remember all of this. That's why we do it together every morning in our trade room. Last but not least here, over on the euro is bearish into a trading range. Now, don't forget, the Eurozone has, or the EU, I should say, has all of their parliament elections, right? All their parliament elections are on Thursday this week, right? Yeah, the 23rd of the month. So chances are, this is why the euro, right, is so sluggish right now. The strategy is pretty much the exact same from last night. We know we're bearish, so I can be a little bit more aggressive, right? If we go up, let the buyers try and sell into their failure. If we go down, I've got to look for what? Remember, we're bearish. I want to be a buyer. What's the right pattern? 1 try, 2 try, you got it, you got it. And you can see right for yourself, you can see these patterns. And again, they may not be that pretty on a slower time frame. On a faster time frame, though, they definitely are. Bear market, right, into a trading range. We run lower. The bears try once, the bears try twice, right back up again. That's the same pattern now we want to see down here, right? Let them try once, let them try twice, buying right back up again. What do we call those? Nested failure patterns. Because you're looking for the failure inside the pullback, right? The term nested meaning inside. And then, of course, we go up. The market is overall bearish, so we can be more aggressive on the sell side. Buyers try to buy the pullback. You can see right there, red candle coming up, and we're selling into their failure. Okay, so as we go up, let those buyers try to take it higher. Let them try to buy the pullback to the moving average, right? We know where their stops are, and we're selling into those stops, right? We're not chasing it. We're waiting for that pullback, failure pattern, right, into pullback pattern. Relatively easy there. Or, right, run back down. 1 try, 2 try, back up we go. Don't forget, stay away from that middle. Right? Wait for it. Up, 1 try, 2 try, failure, right? Wait for it. Down, 1, 2, failure, back up. That's the good stuff. Stay away from that middle, buy that low, sell that high. And again, as I mentioned earlier, don't forget, tomorrow is that day where we've got that major news at 10:30 for crude. So get in early and get out of there early on oil. We'll do it together, obviously, tomorrow morning. And then how will the FOMC announcement, or how will the meeting minutes, how will they impact tomorrow morning? Will it be a full morning session? Maybe only a 3/4 of a session? we'll keep our fingers on the pulse tomorrow, right, to make sure we keep an eye on that time, right? After 10:30, 10:45, right, we'll see how the market feels, right? Keep our fingers on the pulse tomorrow, and we'll see how it goes. As always, don't forget, tonight I'm talking about my plan for tomorrow. If you want to join me and trade it with me tomorrow, the best thing for you is to grab the advanced membership. Our advanced membership comes with lifetime access to our video classes, our daily trading room, all the indicators, all the templates, everything you need. I even include the same cheat sheets and checklists, right, that we work together every evening on this newsletter. So if you want to join me tomorrow morning, we open up 8 o'clock Eastern time. Grab the advanced course. It's right below me on the video tonight. If you're not yet ready for membership, not to worry. Our free trial, right to the left of my ugly mug, right, that free trial has access to our trade room on a free pass. It's got a free trading course and hundreds of examples of real setups we find every morning with our best clients here at School of Trade. Guys, we are just scratching the surface here tonight. Big day tomorrow. Big day tomorrow. Opening bell at 8 o'clock Eastern time. Hope I see you there. If not, please don't forget, right? Please don't forget, tomorrow night is the last newsletter of the week as we go into that holiday season. We'll talk about that tomorrow night on the next edition of our nightly newsletter. I'll see you tomorrow morning, 8 o'clock Eastern time. If not, come back and see us again, same time, same place tomorrow night for the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.